This is a big change in just a month. A month ago, it looked like the U.S. was something that we should be overweight, and now you've switched that to international. Is this because of the Fed pivot, Omicron?
Well, I mean, the U.S. equities are still going to do okay next year. I mean, we have a target at 50-50, but I think you could get double that in some of the international markets, including the emerging markets. Now, a lot of this is valuation. I mean, we really had emerging markets underperform by 25%. So the valuations are attractive here, but we also do see the growth cycle having really bottomed in many of these markets and coming back. So I think that in international equities, there's better value right now, even though U.S. equities are set to do well. And some markets where we just have been more cautious, like the UK, parts of Europe are looking attractive, but also in the emerging markets. I mean, China has gotten very beaten up this year. We're seeing valuations that are attractive there as well, and even in Brazil. So I would just say that some of this U.S. exceptionalism could be fading next year, even though the U.S. is above trend growth. Consumer spending is looking in very good shape. But some of these international valuations, they're attractive now.
So when you say international, can you give us an idea of where exactly you're thinking of? Because obviously we have this policy divergence in many countries now, and international is also very pick and mix.
Well, I mean, everybody is focused on the Fed and when the Fed will start liftoff, which we think will be in June. But in many of the emerging markets, they started hiking much earlier. So we actually think this is an attractive point to look at Brazil. And even in China, after the Central Economic Working Conference, they really did send a message that they want to focus on growth. And we think that growth bottomed in the third quarter of the year in China, that you're going to see better quarterly performance coming up. And so we do like some of these plays in China as well. So China and Brazil stand out, but also the UK as well. So I would still say that, U.S. equities looks to be in a good place. I mean, we're looking at returns that still could be, sort of high single digits, but you're looking at double-digit potential returns in international markets right now. And part of that is that they are divergent cycles. Some of the central banks have already moved in the emerging markets pretty aggressively.
Joyce, I want to throw up this chart that takes a look at the severe underperformance when it comes to China and Hong Kong this year, right? Particularly when you take a look at just how Chinese equities have struggled to catch a break with crackdown after crackdown, and the geopolitics piece really not helping there as well when you take a look at the orange as well as the green lines. What do you like in terms of relative safety and opportunity in the Chinese markets? Because we've had a lot of optimism, a lot of houses saying that they see around 40% upside when it comes to Chinese equities for next year.
Well, consumer discretionary stands out to me. I still think you have to be cautious on the property sector, but some of the renewables, some of the new industrial sectors, I mean, some of this regulatory tightening is going to continue on some of the large platforms. I mean, so we're underweight on gaming. We still think that you have to be cautious. Common prosperity means that you're not going to see some of this shift away on regulatory tightening. But consumer discretionary should do better. There's clearly in the more recent speeches, signs of the credit easing that will be forthcoming, also better growth numbers that will be printing. But we're underweight in healthcare. But we think that in many of the markets that are also focused on the commodities, that they will perform better as well on the energy side, not just in China but across the board. We do see oil prices here staying around $80 or even a little bit higher than that.
Has property bottomed?
I think that property has priced in a lot. I mean, if you take a look at the default rate that is being priced in for China property bonds, I mean, it's 35 to 40%. And I think your default rate is going to be half of that. So I think you have bottomed in certain areas in the property sector. Now, that still is one of the biggest risks that you have to the growth outlook right now, just given the size and the overall economy. But I think much of that got priced in. And I do think that the government is taking some selected, targeted credit measures here on the credit easing side. And they have really sent the message that for consumer discretionary, that's where we do see more opportunities.